Hey guys, and welcome back to another episode. It's me, Adam, and you're watching Unlimited Options Investing. Welcome back to the channel. This week is going to be a pretty interesting one. This week will be a holiday short week, Friday being Good Friday, so the market will be closed. We also get our first earning reports of the first quarter of 2022, and what an interesting time to be looking at earnings given all that's been going on all over geopolitically, commodities, the equity markets. It's been crazy. The bond markets too. We often start off earnings with the big banks. We'll take a deeper dive into that. We also have CPI coming in this Tuesday, and that is definitely going to be weighing on the markets. We've been seeing a lot of indecision over the past couple of sessions. It wouldn't be surprising if Monday we get a little bit more of that, and then Tuesday really moving depending on how hot the inflation reads. CPI is expected to come in red hot again, with inflation unlikely to show any signs of abating as supply chain snarls continue to flare up prices, particularly with Russia's war in Ukraine weighs on flows of global energy and commodities. The anticipated consensus headline CPI will again accelerate to show an 8.4% year-over-year increase, surging higher from February's 7.9% rise. According to Bloomberg consensus data, the figure would mark another decade's high rate of inflation, with the index, even excluding volatile food and energy prices, set to climb as much as 6.6%, up from February's 6.4% increase. And we see the CPI over the past, 50 years, and the increase we've had ever since the pandemic lows in 2020. Oftentimes when we see such a big increase, a recession follows thereafter. Just take that at face value. So take that for what it's worth. The newest CPI print is due out as markets grapple with the likelihood Federal Reserve officials will act more aggressively to rein in inflation after a hawkish readout of minutes last week from the central bank's March meeting. I have to catch my breath because this is a very, very long sentence. Suggested many policymakers favored a double bump interest rate hike to combat surging price levels. Conversation detailed in the March 15 to 16 Fed minutes indicated the bank will soon begin to unwind its $9 trillion balance sheet and signal members of the FOMC would have preferred a 50 basis point increase in benchmark interest rates last month when the Fed raised rates for the first time since 2018. And all these hawkish tones are the reason why the S&P 500 had a negative week, down 1.22% in the past 5 days. And likewise, the tech-heavy Nasdaq down 3.74% over the past 5 days. And taking into consideration April is a strong month statistically, even though the first 5 trading days can be a little bit iffy, days 6 to 19 are oftentimes much stronger. And these are averages of the past 21 years. And also taking into consideration this chart as well, midterm election years that we're currently in this year, which is every line here except for the black one, that one being every year including midterm years. April is statistically a strong month, but after that, May, June, July often tend to be not too good. Combining inflation and the geopolitical issues in Russia and Ukraine, just trying to tie everything we know together. Don't forget, if you're new to the channel, welcome aboard and hit that subscribe button, smash that like button, and check my description below for my TikTok, my Instagram, and my Twitter. Check it out. So Monday, Tuesday are kind of a write-off for me. I don't really care about any of those companies. But Wednesday is when we really start to kick off. Big Bank JPM, Delta Airlines, BlackRock, Bed Bath & Beyond. Thursday before the open, Taiwan Semiconductors, Wells Fargo, Goldman Sachs, Citigroup, Morgan Stanley, United Health Group. And when we take a look at the S&P 500 heat map, if we look at the past 1 month, we see a lot of green, but banks didn't get that much love. Airlines, however, had a strong month. United Airlines up 20%, Delta Airlines up 13%, and American Airlines up 17%. And when we look at the year-to-date performance, a lot more red. JPM down 15.7%, Bank of America down 10.83%, Citigroup down 15.75%, and actually Wells Fargo up 1.56%. And although airlines had a good past month, over the year so far they haven't been doing that well. United Airlines down 4%, Delta down 6%, and American Airlines down 8%. And looking at the ETF XLF that has all the big banks, we've been seeing a lot of chop, a lot of sideways action over the past year. And when you look at the US Global Jets ETF, with the airlines being in a pretty bad place ever since the pandemic started, is down 25% over the past year. We also have TSM that's also reporting. This, similar to another company, ASML, a pair of companies that are both some of the most underrated companies in the entire world in terms of their importance when it comes to creating semiconductors worldwide. This one I'm surprised to see under $100 at a market cap of $500 billion, down 17.87% over the past year. So a lot of volatility in the markets. Let me know in the comments below, how do you think this week's going to go? And knowing what we know about seasonality, let me know your comments. Check out my Instagram link down in the description, as well as my TikTok and my Twitter. Subscribe to the channel, like the video, and I will see you guys in the next video.